Hello, all you lovely people out there. How are you all doing? It's been a little while. I'm Kate Hill and I'm here to give you the best unbiased and honest commentary about our property markets, along with some fantastic hints and tips. So stay tuned. The property industry has welcomed the Australian Labor Party's announcement that it will not change the rules on negative gearing and capital gains tax. Labor's policy to scrap negative gearing and raise CGT was a major issue for them at the past two federal elections. So, in their wisdom, they have committed to maintaining the existing arrangements with these two policies. Our opposition leader, Anthony Albanese, says that the commitment will provide certainty and clarity to Australian working families. Now, this is great news for all Australian mum and dad property investors. The Property Council of Australia has welcomed the move, noting that the previous policies would have hurt the economy, cost jobs, and had little impact on affordability. The Master Builders Association's CEO has said that the move is good news for the building industry, the economy, and the community. Modelling by Deloitte Access Economics found that Labor's previous policies would have reduced GDP, shrunk the construction sector, and failed to improve affordability. Now, this has been hanging over our heads for several years now and is good news for all those who don't want to rely on a state pension or their super funds for their financial futures. The NAB has now raised its property price growth forecasts across the capital cities for this year, tipping average rises of 18.5%. The bank has upgraded its expectations for most cities, with Sydney to rise 21.6%. Melbourne 17.6%, Brisbane 19.5%, Adelaide 17.4%, Perth 11.6%, and Hobart 23.5%. In April, the bank predicted Sydney prices would rise only 6% this year, in Melbourne 5.5%, Brisbane 6.2%, Adelaide 6%, Perth 5.6%, and Hobart 6.1%. For 2022, the NAB forecasts moderate growth with rises around 4% across the capital cities. The report says NAB has revised up its forecasts based on faster than expected growth in prices over recent months. Now, from here, we see the monthly pace of growth slowing but continuing at a solid rate. The current lockdowns are expected to have a sizable impact on the economy, but the impact will be temporary. NAB says we remain optimistic that as restrictions are eased, activity will rebound, as has been the case in previous lockdowns. Now, from where I'm sitting as a buyer's agent, I'm out there every day buying property. There has been no slowdown at all in any of the property markets that we are buying in. And the end of any lockdowns has simply added to the buying frenzy, so watch out. The working from home trend, which has helped drive the property boom in regional areas and smaller cities, shows no sign of slowing down. Data from networking and job site LinkedIn finds that employers are embracing greater work-life balance, with the number of jobs offering remote work options still rising. In 2020, job listings offering flexible work options rose about 14 times compared to pre-pandemic figures. Despite many businesses returning to the office last financial year, ads in the first half of 2021, including a work-from-home choice, rose 3 times on last year. Demand for property in the regions, which has been strong for several years, has caused prices to rise 17.7% in the financial year 2021. CoreLogic says, compared to 12.4% in the capital cities. The LinkedIn MD says that organisations are looking at more flexible arrangements so that they can access a greater pool of talent from across the country. We have gone through the greatest workplace upheaval anyone can remember, and we really think that this is here to stay, he says. Auction clearance rates remain strong across the major property markets. Canberra at 95% and Adelaide at 78% led capital city auction rates last week, while Sydney and Melbourne maintained their clearance rates just above 70% despite their relative lockdowns. There were 1,728 homes taken to auction across the combined capital cities, with Melbourne, Sydney and Adelaide in lockdown. Now, of those, 75% were successful, down slightly on the previous week's preliminary clearance rate of 76%. At this time last year, only 54% of auctions were successful. There were 772 auctions held across Melbourne this week, with 71% successful. Sydney auctioned 585 properties, with 73% successful. Canberra was the best performing city auction market last week, with a clearance rate of 95%, followed by Adelaide at 78%. Brisbane was the busiest of the smaller capital cities, with 164 auctions held and a clearance rate of 71%. Always remember though, people, that Sydney and Melbourne are the major auction markets. Canberra, Brisbane, Adelaide, auctions aren't that common. The gap between house prices and apartment values has widened considerably, with detached houses growing in value more than twice as fast as multi-residential or high-density properties over the course of this pandemic. Research by CoreLogic showed that the median price for houses in capital cities increased 14.2% over the last 16 months, compared to a 5.6% rise for units and apartments. Now, that price growth has resulted in the difference between capital city and apartment median values hitting a record high of $186,000, or 30.5%. This price difference is most pronounced in Sydney, not surprisingly, where there is currently a price gap of 54.2% between houses and units, with the median house price sitting at $1.2 million and the median unit value being $794,000. CoreLogic report that the difference in median houses and unit values has skyrocketed since September 2020, as the house market saw a recovery trend following eased social distancing restrictions across the cities. Now, unit values continue to decline through to January 2021, as low levels of investor participation and subdued rental conditions saw less interest in unit stock. Melbourne also recorded an all-time high difference in house and unit values, with a 52.4% difference in medians at the end of June this year. The data showed the median price for a Melbourne house was $929,000 at the end of June, compared to $610,000 for units and apartments. CoreLogic said that the increasing difference in Melbourne was largely due to the poor performance of the rental market since the start of the pandemic, as well as plunging demand for apartments from prospective tenants. So everyone, we will keep you posted, as always, on all the goings on from around Australia in those property markets as our year progresses, giving you the best commentary and content here on this channel. So please let me ask you to just quickly hit that subscribe button, click the notification bell so that you're getting all that expert knowledge, all those hints and tips around buying, owning and investing properties as soon as I post them up. And if you're enjoying the free content, you're finding it useful, just give me a little like as well. I do really appreciate it. I always do. And I will see you again really soon. Bye.